Good morning, everyone. I'm just getting set up here. So ICT is not streaming this morning. Therefore, I thought I would stream. It's been a while. There is interesting price action, actually, that I. Okay, that should be better now. The stream should be better. I switched to Wi-Fi's, so let me open up my comment section to see if anyone hops in. Alright, I should be all ready to go. Yeah, so just watching that sell side and the buy side right now. I want to see which one gets hit. Obviously we are above the midnight open, and we've been sort of respecting these bullish for value gaps. And now we've kind of moved in a little too much into this whole range here, and this is like completely balanced. So the fact that we close above it, move deep into it, and now we're kind of hanging around here, I don't like that. I'd like it to be really quick. Attack this buy side liquidity, but if it continues to hang around, it's kind of showing me that okay, maybe we won't even hit that buy side liquidity at all, and the why we might not actually hit this buy side liquidity at all today is because it's just a wick. I mean, it's not really the high. If I look at the bodies, it's obviously been taken. If I look at this high, it has been taken, and so there is a case for considering this buy side liquidity as being rated. Hello, Neko. And so like I just use this high because it's the highest high in a consolidation, but the bodies are all over here. That being said, it's also creating relative equal highs, so maybe we can retrace lower and then come back and target that. Who knows, as a Judah swing, I need to wait until 10 o'clock to see exactly how price wants to trade around this level to give me more information. And I think it's also worth looking at potential SMT, but there was some with yesterday with the 9 o'clock high. So you see the Nasdaq failing to make the higher high. Well, the Dow is really failing to make the higher high, but I don't know if this is gonna hold though, because again, it's relative equal highs. Apparently, I'm lagging. Let me see. That satellite at this time of day is not in good position. It's also kind of the weather is a bit bad, so that's probably why the satellites are probably having a harder time to connect because of all the clouds. Because my data works fine. I mean, my data is faster than the Wi-Fi. I'm gonna watch my stream here just to see how it's like. Let me see. It's not terrible. Satellite this time of day. Alright, whatever. Let's keep going. So, yeah, where was I at? So, I want to see just 9:30 how we trade around the buy side liquidity level. But yeah, I was also mentioning how because of, like, all this consolidation in this range, it's sort of, yeah, the relative equal highs. It's sort of like it's not nice and quick displacing beneath lows. It was here, but then did it keep up? No, like it's been making higher lows, and so seeing a bigger manipulation, it's sort of trending higher. And I think if we break out, people are probably gonna be long, and so there's gonna be a lot of liquidity down here, and price could reverse. Maybe fill in. I want to fill in that new day opening gap. I'm not calling this high, but I mean I want to try and fill that new day opening gap. Still target the same way we filled the regular trading hours gap, which was visible on one of the time frames. It was the 15-minute chart, all the way from back here. So we came up and filled it by a couple of ticks. But I want to do the same thing with that new day opening gap. And that might not be today though. It could be, tomorrow, maybe even next week. But if it's gonna show willingness to do it, I'm building a case for it to be right now. Because again, it got above this range, which is completely balanced. So this range is completely balanced. And once it gets above that and really closes above it, it shouldn't really be willing to come back into it. So we saw 50% be traded to, and that's sort of alarming. It's ticking around a little bit, so we are 9:30. The time could be that it really pushes it up there really quickly, get it out of this balanced range, and then run it lower. Yeah, it's not a bad idea. Love to see it go this higher and push lower during silver bullet hour. Make sure that's your idea though. Don't try and trade based off what I'm thinking, because my accuracy in these environments is a lot lower. I mean, if you look at the price action we're trading and you compare it to previous contract month, I mean this is pretty ugly. And every time I try and trade in these environments, my accuracy is always lower, because there's a lack of sort of manipulation, and it's more of like a continuation environment, and it's not something I'm comfortable in. But hopefully now it can start to change and it can start to get a little bit more fluid. So I'm gonna let 9:30 open up and do its thing, and meanwhile I will be reading a book, and I'll comment if there is something to comment about. How do I okay. Whoa, what the fuck? You're gonna sue me? Oh, well, let me place disclaimer before anything. Oh, wait, it's the wrong one. I have to re-upload the image. I have no disclosure. Fuck it, I don't have a disclosure, but it's in the description. So whatever. I have to get one. Hello, ODICT. Just one thing I want to comment on real quick is the chart. Obviously, we're not seeing that quick run up. We're seeing it move back into this bounce range, so it's showing that the willingness to come up here is maybe not as strong. And we don't really we can leave this area here as relative equal highs if we kind of ignore the wicks and use more of the bodies. We can see how it's relatively equal. It could price this place away and then use it as later. It could, but what I'm focusing on right now is this sort of consolidation and how it got above to the premium side of this range and is refusing to continue. That is something to, I wouldn't want to be short, but I mean, I wouldn't necessarily want to be long either. I'd rather wait until we have nice and fast price action that quickly moves to the desired levels, which was not what's happening right now. Jackson Hole 2022 was crazy. So I wasn't even trading in 2022. So I believe Jackson Hole happens every year, and I don't know. I guess, yeah, 2022 was a big year because there was a lot of risks in the financial system amongst countries, and that's basically what they talk about. They talk about the risks and how the path forward. Um, I don't remember everything that happened in 2020, but there was a lot of scary things that basically caused a market crash, or fear of the market crashing, alongside the higher interest rates. But it'd be something good to look back into. But this year is probably going to be even crazier because basically in 2022 we were at a turning point, and everyone's anticipating another turning point this year, and so it'll be really interesting to see what the Fed say. But I don't know if it's going to have as much impact. There are some people that say it won't have as much impact, and I don't think it would if the Fed chooses not to do anything. Because if you look at the economy, I mean, everything is working fine. Unemployment's going up, and that's something to be concerned of. But as far as the inflation, it's doing exactly what they wanted to do, and they're able to maintain higher interest rates. So I don't. I'll be interesting to hear the questions that they're asked. And I will definitely be tuning in. But yeah, like it's a potential turning point this year, so probably will be very interesting to watch. This fair value gap could be an institutional or flow entry drill, but I'm not considering it. I don't want to take a trade on it because the Dow, as you can see, is going lower, and so these two are clearly not correlated. S&P looks alright, but see how far down into its range it already is, and then the Dow is absolutely having a heart attack. So it's not. No, it's some. Oh, I had to yawn. I guess interesting developments are happening in markets right now. Also, I wanted to apologize for everything I've ever said about Tanja on this YouTube channel. I still think you can be profitable if you fade her, but this time you have to obviously manage your stop loss because she is getting good 100-point plays, and I don't think that if you put your stop loss where her take profit is every time, you will be profitable. But it's still props to her. If you really look at it for like this year, like the stock market has just been going up, and only really big thing is that rates are up. That's the only really interesting thing. It's gonna make Jackson Hole interesting this year. But 2022 markets are crashing, and the Federal Reserve were at a turning point for interest rates, so that's why it was a lot more interesting this year. I don't really think it's going to be anything too big. Of course, there's going to be some reaction about interest rates, but other than that, it's just a regular thing. I think it will be very interesting for people that really want to study more monetary policy globally among central banks, but for individuals and how the market is doing, it's not going to be as big as it was in 2022. Okay, so that buy side liquidity is hit. Now, pretty nice and quick from a 50-minute chart perspective, and we wick down here real quick. And so this is, I would consider this like sort of like the juice swing. But I want to see the Dows show that it's willing to agree. So it did start. Oh my god. It did start to go up at the same time. And now, so okay, I'd like to short, but I'm not interested right now. At least maybe I need to see more evidence, because the bearish breaker. My model is look for a 5-minute short-term high that forms a bearish breaker. It would be this right here. But however, if I'm trying to use this bearish breaker to resist price, it's already at the low. I mean, by the time it gets underneath it and it's resisting it, I'm already getting in underneath midnight open in a discount, right? Because if you look at this low, that high, that's where the discount is. So I would want to look at this range, but I don't know if prices. This breaker was made in a pretty big, basically 50% of the range. I mean, it was made in a pretty big discount actually. It was made in, well, yeah, in a deep discount actually. The low was formed, so it's. I don't like the how the breaker formed, and I'd wait for more information. Also, Neko, you said elemental Y, haha. Which part? Why what? Every time the liquidity gets ran, I get an extra concurrent viewer. Somebody passively looking to confirm their bias. Okay, well, I like how the S&P is looking compared to the Nasdaq, but the Dow is uncomfortable. If this can retrace a little bit higher and get into a premium where the Nasdaq is, then I would be more open to shorts. Where is the Dow in the bigger scheme of things? It's near its high. I don't even want to try and look at the Dow. That thing is ugly. There's also FOMC minutes this afternoon, so that's something else that could provide more consolidation. I like the 1 minute chart is really looking ugly, and there's lots of. One thing I really don't like is when those bodies sort of open up inside each other or leaving a lot of volume imbalances. Wicks are immediately rebalancing every single price run, and so like this entire range is completely balanced because of all the wicks. There's no open fair value gap, which means that if I am framing lower, I'd be looking at the lows and this low, that low, that low, midnight open. So, and I'd expect a clean run at least down to the first low. So if we're gonna stay up above here, it could be good to create another sort of breaker. incoincidence. Oh my god, how do I say this word? Incoincidentally. I don't think I'm saying it right. Incoincidentally, price made a well, it's making a new high. It's not really displacing. I mean, it's pretty obvious. We don't have that jagged sort of price action. Now there's this 5-minute short-term high that could be rated and used to go lower, but I don't really see a real breaker, right? Like this, technically, would be my rules to go short, but I don't really see a real breaker. So I don't really see potential for an order block. I think maybe 10:30 would be a better time to wait for. Actually, no. What am I saying? No, it does. This candle isn't a bad breaker down here, but we close higher and above this high, and then we can come back and inverse this gap. That's potential maybe for the trade. But however, if we also displace here with speed and distance, then that's something else that would, that would cause there to, I would just get off the charts if that happens. So I want to see how it acts here. If it's going to slow down. It looks like it's going to displace speed and distance. Another thing, this light blue area is a completely balanced price range with the wicks there and an order block, and so we're moving into that, which is signifying that we might actually go back to these highs. Yeah, the Dow is actually agreeing though now. It's following, but I mean it's agreeing now with the Nasdaq. So longs would be good, but we're above midnight open. So what I would do in this scenario is, I tried, obviously now I'm two-sided. If I want to go short, I'm making a case to go higher, right? Because, unless it really starts to displace lower, like here. But I don't like how far up into that balanced price range we moved back here. If the bodies want to stay out of it, though, that's why I'm wanting to see, really quick price action down. But we're already like a minute and a half until close, so I don't know if that would happen. This could also be an immediate rebalance too, or the longs could be the case here. Hello, Andy. You changed up your channel. More presentable. I like it. I know we have two C's though. I'm trying to think what that could mean. But today is obviously ahead of Jackson Hole whatever it's called, symposium. So no, not very good. And there's FOMC minutes, in the afternoon. There was at 10 o'clock. Actually, I wanted to check this. A revision for non-farm payrolls, but I don't know. Not many people actually pay attention to this. I don't think, because if they paid attention to the revisions, I think people's mindset would be in a much different place than it is currently, because they revised drastically everything. But okay, 10 o'clock just came out, so I was highlighting how price was consolidating up here and running into this balanced price range. And so a lot of people are probably thinking this is a Judas swing, wanting to see a reversal and going to the sell side. But because we're pushing into this balanced price range in the order block, I highlighted institutional order flow entry drill. No, not institutional, immediate rebalance right here, where you could long that, and then it did deliver. So I don't really want to do anything else. See, I was initially wanting to only go short today, and that did not give me the conditions I'd look for to go short. At this point, it could reverse up here, but I'd rather, it's overextended, so I'd rather not until I see these highs up here get hit and potentially that new day opening gap filled. But yeah, that immediate rebalance is obviously not my model, and it's against my rules to take. But I would have been, how many points did it? Yeah, I would have been out by from it by now. We could have a engulfing candle, which creates an order block, but there's just a lack of manipulation up here. So if we do leave this large wick and we start to move lower into this range, back to midnight open, towards midnight open, I'd like to see some sort of second stage. If that does happen, I'd like to see some sort of second stage, which then at that point could provide me with a trade. But as you can see right now, that's not the case I'm going with. I'm still favoring, that immediate rebalance, breakaway gap left here, and a raid on this high there. Also, that was not financial advice earlier when I said you could long there. That's just me thinking out loud. Don't sue me, Neko. Oh wow. Of course the Dow is. This is another reason I don't want to take trade. It's because the Dow is not agreeing. This has been the case, I think, like 80% of the summer days. It was the same last year too. The Dow was never in agreement. That just creates very choppy conditions. The dollar seems to be rated liquidity and going lower, continuing this trend. So that could put pressure on lower prices, meaning that it would be actually harder to go lower for the stocks or the indexes. I think that the dollar is going lower in anticipation of rate cuts, but I think in September it'll be very interesting to see what happens and how the markets will react to that. Also, some of these plays are annoying me. Hold on, I just have to delete these. I see some people, sometimes they share charts and there's like a bunch of numbers on the screen and stuff. I just can't stand it. I mean, I don't say that, but I mean, I keep it to myself, but you can see it really bothers me on my own charts. Imagine if let's just say I had actually taken that trade, Apex would have flagged me because I would have taken it within 5 minutes of a news release. And if I had taken profit on this news release and I had gotten in before this entry, they would have also flagged me because I would have taken out profit within 5 minutes of the news release. And then I would have had to explain myself and show them that I do this all the time. And this is all the more reason why you should get your own account. Plain and simple. No. Hello. Get away. Let's see how gold is performing. I think it's declining. No, it's rising again on the anticipation of rate cuts. But I think the dollar is going to get back in line with gold if there's no rate cuts in September, which is my base case. But bond prices are still going up. All the effect of rate cuts are in effect, are being factored into the economy without even having to do anything. I think up here it'll probably, I think a lot of people probably have the idea to short, and it'll probably kind of chop around a bit, maybe slightly go higher, or have these nice big retracements lower that are like fast, not big but fast, to kind of get people into shorts, and then it'll run higher. It might even create some gaps and inverse them. But I think this is basically the same condition that we had, was it Monday or last Wednesday? If the connection would allow me to go back to last Wednesday. No, Tuesday. Yeah, back here when I took these two losses. Yeah, I think we're basically seeing this. We're probably gonna move sideways a little bit and then continue this run higher later. Dow, I don't want to look at Dow, man. Dow, yeah, it's going lower. Wait, what was Dow doing back on Wednesday, August 14th? I wonder. Freaking Dow. Back here on Tuesday. Hold on, somebody's knocking. Alright, so yeah, sorry, somebody knocked on the door. But back here when we had this sort of consolidation and sideways price action, the Dow was moving lower actually. So you can see it as Nasdaq is chopping around, the Dow is moving lower. When did Nasdaq resume moving higher? When the Dow started getting agreement and make higher lows. So I guess that's all I'd really be looking for. is once the Dow starts to make higher lows, I'd want to see the Nasdaq really accelerate higher, and sort of. I mean, I've already invalidated any idea to short. I'm more one-sided now, but it's against my rules to look for any longs. We're way above minute open, so I'll probably end the stream unless anyone has any final thoughts. I'll give it 2 minutes. Any final questions or anything? There's a really big delay on the comments, by the way. How big is it actually?
Starbucks would probably. Yeah, it's not a bad idea. Love to see you guys push.
What? Okay. Never mind. Hold on. I'm trying to see how big the delay is. Oh my god.
Oh wow.
This thing is 8 minutes delayed.
This is.
What the heck? That's. So you only saw me call this as prices up here then. That sucks. Could have made you some money.